Strong Indian equities. Indian equity market is strong. That is the belief of Indian investors. For that reason, Indians are buying into the Indian story of as foreign investors seek a flight to safety. Though foreign investors are withdrawing their investments, Indian investments are filling the gap of investments into the Indian stock market, believing that the Indian stock market is strong, will be strong, and for the strong economy and strong future. Financial turbulence due to central bank actions and fresh supply of disruptions have been cushioned on Dalal Street by domestic retail investor interest that has hosted Indian equity in the market capitalization sweepstakes. Though there is a disturbance in financial market due to frequent interest rate changes by the regulators, also disturbance, global war between Russia and Ukraine, and also pandemic situation and domestic retail supply disruptions also are not discouraging the Indian investors to invest in equity market, in Indian equity market. Indian investors are showing more confidence on Indian equity market. For that reason, they are investing more and more in equity market either directly or through mutual funds. Indian equity is now valued at 3.1% of the global stock market capitalization, which is nearly 30% higher than the earlier period. Now, Indian equity market value is 3.1% of the global stock market, which is 30% more than the earlier period, that is compared to previous years. Also, the number of demat accounts in the country has doubled since the onset of the pandemic, as have assets under control of depositories. The number of demat accounts also doubled, and also the assets under control of depositories also improved to the great extent. A new generation of technology assisted investors fed savings into a bull market that more than offset what foreign portfolio investors pulled out last year. A new generation of investors are trying to enter in the bull market, which were into the bull market where the foreign institutional investors are withdrawing their investments. That is, the Indian investors, even for small amounts to larger amounts, are trying to invest in the Indian equity market. Value-based buying could stabilize the Indian market if the sell-off in emerging markets intensifies. So, the ultimate end of safety of investment in equity market is based on value-based investment. If the investments are reached towards or made towards the value-based investments, that will give lot of better income and also safety and also income to the investors and liquidity to the investors. Also, bond yields have raised to fresh highs on the eve of the second anticipated pro-rate hike in Wednesday. That is expected. Bond market is also improving because of assured income and also less risk and liquidity options available. The fiscal response to elevated inflation too indicated demand revival as a priority. Indian supply market has improved its performance, and also the increase in supply means increase in production, increase in demand, increase in production. That is evident from the GST collections improvement month by month. Every month the GST collections are improved from more than 1.4 lakh crores. In April it was 1.68 lakh crores. In the month of May, 1.4 lakh crores. That is evidence for improvement in Indian economic activity, which improves the purchasing power of Indian consumers, that increases the demand and which needs support of supply. Even with some revision to earlier growth projections, India will continue to be among the fastest growing major economies. That makes a strong case for Indian equities. Global valuation institutions are assuming that India will have a better future development, better growth projections, though maybe less, but it is in the growth perspective. For that reason, that is a strong case for Indians to invest in Indian equity markets. Also, global investors are withdrawing investments from Indian equity market, maybe due to their financial restrictions or financial compulsions, or there may be some other reasons, but not the security, profitability, liquidity of the Indian equities. So, Indian equities are assured of income, liquidity and safety. The reason for withdrawing investments by institutional investors may be due to their financial compulsions, economic levels or their economic requirements, but Indian equity market is strong and healthy.